Assalamu alaikum. Activity-based costing is what we have been discussing recently. We have discussed that within the organization, the activities are identified, which is going to be a group of tasks put together, normally those tasks which will have a single cost driver. Cost driver, remember, is that aspect which drives the significant portion of the cost, which is the cause of significant portion of the cost of that task and that activity. So where the group of tasks can be identified as having one cost driver, that can be regarded as one separate activity. So the different activities comprise within the organization, and so for each activity we identify the costs and we identify a cost driver so that this cost can be allocated to the product or the cost object. In our examples, we have used product as a cost object. One could use customer and various other cost objects, departments, machines, things like that. So the idea is to allocate cost to the cost object, in our case the product, as accurately as possible and based on the consumption of resources by the product. So this is the basis of activity-based costing. And then we went on to classify the activities in different hierarchies. Hierarchies are different levels: low level, medium level, high level. So these different levels are the different hierarchies of costs. So we have identified and differentiated costs between various hierarchies. We said there is a cost at what is a unit level activity. Unit level activity is that activity which is going to affect the actual production. Every time a unit is produced, the unit level cost is incurred. And examples of this are direct material and direct labor. The next level of activity, we said, is the batch level activity. This activity will comprise of things such as a production run or a setup of machine. So all costs incurred in order to produce a batch, that becomes a batch level of activity. Going further, we said there are product sustaining activities and there are facility sustaining activities. And we have said product sustaining activities are those activities that are important to continue the product into production. And that means the development of the product, the engineering effort, the research and development, things of that nature. And above that is going to be the facility sustaining activities. Those are the overall costs which are required to run the entire business. They will include things like property costs, overall general management, and so forth. This basis and this classification and this dividing into activities is helping us to accurately allocate the cost to the product. The essential part is that costs should be allocated accurately to the product so that analysis can be made. We are going to discuss today the various profitability analysis that can be done having the help of ABC costing. Profit analysis means to look at profits in different ways. Look at the profit of the product, look at overall profit, and look at products and different group of products. So these analyses can be made if we have accurate costs coming out of the ABC system. Let's look at the approach taken by ABC system for profitability analysis. The approach of activity-based profitability analysis is to categorize costs according to their hierarchical levels. As we discussed, 4 hierarchical levels. We are going to categorize costs at those levels and then look at the profitability at those levels. Hierarchies identify the lowest level to which cost can meaningfully be assigned without relying on arbitrary allocation. The hierarchy allows us to analyze costs in such a way that we can directly arrive at the costs of resources being consumed by the product. We are going to use cost drivers to allocate. And we are saying that we should minimize the use of arbitrary allocation. Arbitrary means a generalized basis being used. And in traditional systems, we were using certain generalized bases such as the machine hour rate, the total overheads. All of the overheads are not going to be directly related to machines, but we are using a generalized machine rate to allocate the overhead cost. So this is an arbitrary allocation of the overhead. Under ABC, we try to minimize this arbitrary allocation as far as possible. The lowest hierarchical level may be the product or customer, and ignoring the business unit level, the highest levels are product lines and distribution channels. So at the bottom level, we are saying we will look at the cost of the product. And so above that, we can have the batch level activities and so on. Ignoring the overall business unit profitability, we are going to regard the product line as the highest level and things like distribution channels. Distribution channels are various channels in which the products of the company are distributed to the users. One way could be that the organization appoints distributors and distributes its products via nominated distributors. Another way could be a direct distribution where the manufacturer themselves arrange for the distribution of the product straight to the retailer where it can be purchased by the consumers. And so there are various channels. There could be distribution channels, could be the large stores, or there could be the wholesale market. So all these various distribution channels can also be used as a level for our hierarchies. Let us focus on the product as the cost object. A unit level contribution margin is calculated for each individual product. This is derived by deducting the cost of unit level activities from sales revenue. So we are going to take the product as our cost object. And so we will focus on the cost of the product. And we are saying that starting at the unit level, therefore, unit level activity and profitability is arrived at by deducting the unit level cost, which we said is the direct labor and direct material, the cost incurred for producing every unit. So direct cost, such as direct material, direct labor, is deducted from the revenues obtained from this product, is going to give you the unit level contribution or unit level profitability. From this unit level contribution, expenses related to batch level activities are deducted. Next, the cost of product sustaining activities are deducted. Thus, the 3 different contribution levels are reported at the individual product level. So we have the unit level profitability. From that, when we deduct batch level costs, we can get to the batch level profitability. And from there, if we deduct the product sustaining activity costs. And product sustaining costs, again, we have said before, are the costs required to ensure continuity of production of this product. And it includes marketing costs, it includes development costs, research costs, it could include engineering and design costs. So the product sustaining activities, that cost, once that is deducted, we arrive at the product sustaining profitability. So we have looked at 3 levels of contributions or profitabilities. 1, the unit level; 2nd, the batch level; and 3rd, the product sustaining level. Here is therefore in front of us an analysis of profitability and cost, which is going to help in decision making, whether to continue with the product, change the product, which are the profitable ones, which are the non-profitable ones. Things like discontinuity, if we need to discontinue a product, and also whether the products can be in a same mix or whether the product mix needs to be changed. Differentiating contribution at these levels provides a better understanding of the implications of product mix and discontinuation decisions in terms of cost and profit behavior. There are 2 further levels within the product hierarchy. These are the product brand level and the product line level. Hence, we have profitability analysis at 3 different levels. There could be others, and we have said that we have our hierarchies, but we can ourselves determine what hierarchy to have which is more suitable for our organization. We can look at a product line profitability. A product line profitability can be seen as a range of products within a product line. And we have earlier discussed examples of juice. So there could be a product line of juice manufacturing. And there could be the different flavors of juice, such as mango and apple and grape and things like that. Those can be different products within the product line. And also there can be different size of packaging. The 1 liter juice pack, the half liter juice pack, the small quarter liter. So these are all products within a product line. And we can keep the product line as a level of our hierarchy. So all costs that go up to the product line can be grouped together. This is the example of a product line, and so that's one level. Similarly, we can also use product brand as a level. There could be one brand, and within that brand, there could be several products. And therefore, we have a group of products within one brand. And different products of the same brand are going to provide you a product range. And so costs related to all those products within the brand are going to be the brand level activities. An example of different products within the same brand, you could think of the brand of milk. There can be milk of the same brand. There could be milk powder of the same brand. There could be cream from the same brand. There could be cheese from the same brand. So all these same branded items will form part of the group of products that can be identified at a brand level. So there are various levels at which you could organize your activities and build that as a level of hierarchy. Where products are marketed by brands, all expenditure relating to a brand, such as management and brand marketing, is for the benefit of all products within the brand and not for any specific individual product. It should thus be attributed to the brand and not the individual product. So when we look at brand level activities, we have to see that the brand has various costs incurred at the brand level. There could be costs such as management. There could be cost including the marketing cost. Now, all these brand level costs are going to be costs that are incurred for all the products in the brand. So this cost is going to have to be divided on the various products within the brand, and this cost is not for any one specific brand and specific product within the brand. Now, we took our example of milk and cream and cheese and milk powder, etc. So where a brand is being advertised, for example, then that brand is what is getting the benefit of viewership, of customer viewership. So all the products within that brand are getting benefit from that exposure, from that advertising. Hence, the cost of that advertising for the brand can be spread on all the products within the brand. Similarly, marketing, research and development, and distribution expenses might be incurred for the benefit of the whole product line and not for any specific brand. So in the same way, we could be looking at a product line, and there could be several brands that are being produced in that line. And so costs incurred in the product line could cover several brands, and they will have to be spread on all the products within the line. Therefore, these product line sustaining expenses should be attributed to the product line. Finally, the profit for the organizational unit as a whole can be determined by deducting facility sustaining expenses from the sum of the product line contributions. So after you have either product line or the brand expenses, brand level expenses, you could then deduct all these expenses from the overall contribution to get the overall profitability of the organization. We had different levels, all different levels of profitabilities, and all these profitabilities are slowly getting to the overall profitability of the organization. Brand level, product line level, and below that, batch level, and below that, unit level. So once you have the product line activities of all the product lines, you can put that together, and that would give you the contribution for the entire organization. The aim of ABC hierarchical profitability analysis is to assign all organizational expenses to a particular hierarchical or organizational level where cause and effect cost assignments can be established, so that arbitrary allocations are non-existent. So this is the aim. The aim of this ABC hierarchical profitability analysis. The aim is to try to get to the different levels of profitability, see the profitability of different aspects, and try to look at the cost allocation on the basis of cause and effect. The idea is that the costs should be allocated on the most accurate basis. And that is how you will get the most accurate profitability. So cause and effect means whatever is causing, that is going to have the effect. That's where the cost is incurred. So that's where cost should be allocated. The thing to avoid, we said, is avoid arbitrary allocation. Avoid allocation on a generalized basis. Avoid allocation which cannot be directly related to the activity or to the product. That is, generalization is going to have inaccuracies, and it is going to be an approximation. So if we can avoid that, then we can accurately allocate our costs to the product. The hierarchical approach helps to identify the impact on resource consumption by adding or dropping items at each level of hierarchy. For example, if a product within a particular brand is dropped, then all unit, batch, and product sustaining activities uniquely associated with that product will be affected, but the high level brand and product level activities will be unaffected. Therefore, this is the help that we get from this hierarchical approach and use of ABC, that we can see the effect and impact of dropping one product and the rest of the activities carry on. So at the unit level, the impact of that product will be felt if you drop one product. And at the batch level, that product will be felt. And also the product sustaining. But the other products within the line and the other products within the brand, they will have no impact. They will have the costs being incurred as usual. So overall product line level costs are going to continue. So we can therefore see the impact of either removing or adding products within a line or within a brand. And that helps us identify the costs and make the appropriate decisions. Resource consumption models. Possibly the most important theoretical advance in ABC systems was one which emphasized the ABC systems are models of resource consumption. ABC systems measure the cost of using resources and not the cost of supplying resources. This highlighted the critical role played by unused capacity. So next thing we'll look at is how ABC system is going to help us by identifying resource consumption models. We have said the entire system is based on what costs and what resources are being consumed by the product and allocating them on that basis, on the basis of activity. So this is an important aspect that we can now see what resources are being consumed by what activities. The ABC system is going to measure the cost of resources that are consumed and not the cost of resources that are supplied. There's a difference. The supply of resources means what facility and what activities are made available, and they have a capacity, and the actual usage of that capacity might be not 100%, it might be 80%. In that case, there will be some unused resources. So this system is going to highlight this aspect, that you can have resources which are used and unused. The cost of used resources is identified separately and allocated direct to product. And you have a separate identification of the unused. To have a good conceptual grasp of ABC, it is essential that you understand the contents of this section. So that's how important this section has been regarded. It has been regarded that you need to understand this section and this resource consumption model in order to really understand the benefits and the theory of the ABC system. It is fundamental, and it is providing a new way of looking at things. So far, costs have not been divided into used resources and unused resources in a very detailed and organized manner. Normally, people talk of the machine capacities and the excess capacities or spare capacities in machinery. But here, under ABC, we are going to look at all resources, and we are going to identify what proportion of the resources are used and what remain unused, and therefore what is the cost of the unused resources. Use the following equation to formalize the relationship between activity resources supplied and activity resources used for each activity. Cost of resources supplied is equal to cost of resources used plus cost of unused capacity. The left-hand side of the above equation indicates the amount of expenditure on an activity depends on the cost of resources supplied rather than the cost of resources used. So we are saying, therefore, this resource consumption model is the model that equates cost of resources supplied to the cost of resources used and the spare capacity. This identification of spare capacity and allocation of a separate cost to this capacity is something coming out of this ABC system. Now, we therefore understand from this equation that the cost of any activity is the cost of the resources supplied. The total cost that will be incurred by the organization is the cost of supplying the resource. The usage of the resource and the cost of the usage might be a separate thing. So we are incurring the cost of supplying, and the usage is perhaps part of the total cost. This identification is identified in this model, and even though we are using only a portion of the total resource supplied, we should cost and allocate to the product the usage and regard the excess capacity as a separate cost. Example: the following information relates to the purchasing activity of Cessna Company for the next year. 1. Resources supplied. 10 full-time staff for rupees 30,000 per year. This is the supply of the resources. The company has 10 full-time staff at 30,000 each. The annual cost of this activity is 300,000. The cost driver has been nominated as the number of purchase orders processed. So we take this example. We have a company. They have 10 full-time employees. And the total cost of the 10 employees is 300,000. We are using as a cost driver the purchase orders being processed. Quantity of cost drivers supplied per year. Each number of staff can process 1,500 orders per year. Therefore, a total of 15,000 purchase orders. Estimated cost driver rate is rupees 20, and that's calculated as the total cost of 300,000 divided by 15,000, which is the total purchase order. So we are saying that the resources supplied are 300,000 is the cost of all the resources, and the cost driver, which is the number of purchase orders, we are saying each person can process 1,500 purchase orders, and therefore a total of 15,000 purchase orders can be processed. So this is the total resource supplied. This is the total capacity of processing purchase orders. And by using this cost driver, we can arrive at the cost driver rate, taking total cost, dividing by the total number of purchase orders of 15,000, we get a cost driver rate of rupees 20 per purchase order. This is the cost of processing one purchase order. It is rupees 20. Number 2, resources used. Estimated number of purchase orders to be processed during the year equals 13,000. Estimated cost of resources used assigned to parts and materials will be 260,000, which is the 13,000 times the rate of 20 per purchase order. So now we look at the cost of resources used, and this is based on the organization's estimate. Although they have a capacity of processing 15,000 purchase orders, they expect that they are going to process 13,000 purchase orders. So the cost of resources consumed at our cost driver rate of rupees 20 per purchase order is going to be 260,000. So we had 15,000 capacity of purchase order processing supplied, and we expect to use 13,000 purchase order processing. So therefore, the cost of 13,000 purchase order processing at our rate of 20 rupees is going to be 260,000. Number 3, cost of unused capacity. Resources supplied 15,000 minus resources used 13,000 at the rate of rupees 20 per order is equal to 40,000. The 2,000 surplus capacity of purchase orders at the rate of 20 is equal to 40,000. So then we can arrive at the cost of the unused capacity. Total supplied 15,000, estimated use is 13,000. So there are 2,000 processing order capacity which is unused. And we apply our cost driver rate of rupees 20. So we can see that the cost of the unused processing orders is rupees 40,000. Overall cost is 300,000. 260,000 is what we expect to use. The activity cost is going to be 260,000. And the unused capacity cost is going to be 40,000. Periodic financial accounting profit statements measure the expense incurred to make the resources available, i.e., the cost of resources supplied, whereas ABC system measures the cost of resources used by the individual products. So this is where the major difference is going to arise. When we produce our periodic accounting statements, they are going to measure the cost of the resources that have been supplied. They are going to measure the full cost of the resources. And we can then look at the ABC system, and we can then arrive at the cost of resources that have been consumed. Herein lies the difference and the advantage and the additional information provided by the ABC system. Cessna Company expects to process 13,000 purchase orders. The ABC system will therefore assign 260,000, the 13,000 orders at rupees 20 per order, to the parts and material ordered during the year. This represents the cost of resources used. The predicted cost of unused capacity will be 40,000, 2,000 orders at the rate of 20 per order. So this is where the information comes in. We have been told that 13,000 is going to be the used capacity, and that is going to cost 260,000. So this represents the cost of resources used. And we will then also be able to arrive at what is the cost of resources that are not used. And in this case, that is 40,000. Unused capacity arises because the supply of some resources has to be acquired in discrete amount in advance of its usage. Supply cannot be continually adjusted in the short run to match exactly the usage of resources. Typical expenses in this category include the acquisition of equipment and the employment of non-piecework employees. These are categorized as fixed costs. So this is how costs behave. This is cost behavior. We have discussed cost behavior at the start of this course. They could be fixed costs, they could be variable costs, etc. In the short run, many of the costs will be fixed, and it will be difficult to adjust these costs to the usage. You have to supply a level of activity, a level of service in order to carry out your production activities. So at the start, you are going to have a predetermined capacity. And in the short run, that will remain constant. And examples of these costs, we said, are things like machinery. If you have a machinery that has a certain capacity, you may not be able to use the full capacity from day one. So there will be an element of excess capacity for a while. Similarly, in the number of employees, which are non-piecework based employees, management grade staff, the management staff will be there regardless of what level of activity. So there can be some unused resources being supplied to the organization at times, and they will not be able to be fully utilized. These are usually fixed costs. Some resources, example material, casual labor, energy, can be continually adjusted to meet exactly their usage. These are categorized as variable costs. The problem of adjusting the supply of resources to match their usage applies only to fixed costs. So the resources such as variable costs, like material, like casual labor, like energy, these are costs which you can normally adjust according to need. You purchase as much material as you require, you engage as much casual labor as you want, and energy costs will be incurred for the duration the machines are running. So all these are variable type costs, and they can be adjusted to the requirements. Hence, where you will find spare capacity is going to be in fixed costs. Variable costs will be adjusted to the needs, so that cost will be according to requirements, but fixed costs which are incurred as a block in discrete amounts, in settled amounts, that cost will continue, and that cost will be constant, and that will give rise to excess capacity. Activity-based systems will measure the cost of using these resources, even though the cost of supplying them will not vary with the short run. Managers make decisions, for example, on changes in output volume, mix, and process changes, and such decisions result in changes in activity resources usage. Where such decisions result in a decline in demand for the activity resources, then the first term on the right-hand side of the equation above, cost of resources used, will decline. However, the cost of unused capacity, the second term on the right-hand side of the equation, will increase to offset exactly the lower resource usage cost. So that's how we are saying that costs are going to be measured. Managers are continually reviewing their production figures, their cost figures, and their profit figures. And based on their information and decisions, they might alter mixes, product mix, they might change products, they might add or remove products, discontinue products. In the short run, we are saying, therefore, the costs that are going to change based on this decision, we have looked at the equation. We said there is a resource supplied, which is equal to the resource used and the spare capacity. So if they are going to reduce the demand based on their decisions, they are going to reduce the demand of some resources, and they are going to reduce the usage of certain resources, that cost is going to come down, the cost of resources used. But if the costs are of a fixed nature, then the cost of excess capacity is going to rise equally to offset, so that the total cost of resources supplied is arrived at. Cost supplied identified by usage and spare. Where usage is changed in the short run, there the spare is going to change equally and in the opposite direction and therefore the total will remain the same. To translate the benefits of reduced activity demand into cash flow savings, management action is required. They must permanently remove the unused capacity by reducing spending on the supply of resources. In order to obtain a cash benefit from the reduced usage of resources, some management action is going to be required. We have said that when they reduce usage, the excess capacity increases. So in order to have a cash benefit, then the supply of the resource, that has to be reduced. The overall resource that has been supplied to the organization, that supply of resource has to be reduced in order to provide a cash benefit to the organization. So in the short term, when you are just changing the usage, the overall costs of the spare capacity will also change, and there will be no benefit in cash. Cash benefit, they must make decisions regarding the supply of the resources. Demands for activity resources can also increase because of decisions to introduce new products or expand output. Such decisions can lead to situations where activity resource usage exceeds the supply of resource. In the short term, the excess demand might be absorbed by people working longer hours or faster. Eventually, however, the additional spending will be required to increase the supply of activity resources. So in these decisions, a situation can arise where the managers find they want to increase their output or perhaps increase the product range. And when that happens, the demand on resources is going to increase. So where demand increases, in the short run, it may be possible to extend existing resources to meet this additional demand. The example is for working longer hours or working faster through incentives and through other schemes, motivation schemes. However, if this increase in demand is on a continuous basis, then at some stage the organization will have to make that extra expenditure and expand the resources being supplied to the organization to meet this new excess demand. Selecting the cost driver denominator level. In the above example of Cessna Company, there are two potential denominator levels that can be used to establish the cost driver rates. These are the capacity supplied and the budgeted activity level. So now we look at the selection of the denominator level for the cost driver. What is the denominator level? The way in which to arrive at the rate of the cost driver is to look at the total cost of activity and look at the volume of activity, and you divide the cost by the volume to arrive at the rate of the cost driver. Now, therefore, this volume is the denominator. The denominator, the volume, the quantity with which you are dividing the cost to arrive at the rate. In our example of Cessna Company, there could be two possible denominators. Two possible denominators are possible. One that can be used, that can be based on capacity, and the other that can be based on budgeted usage. We saw that in Cessna Company, the overall capacity was 15,000 processing orders, but the expected usage was 13,000 orders to be processed. So there was a spare capacity of 2,000. The total cost of 300,000 could therefore be divided either by the 15,000 total quantity or the 13,000 total quantity, being the quantity of budgeted usage. And these will give two different driver rates, cost driver rates. So there are two possibilities. the practical capacity and the budgeted usage. If we see in our example that if we had used a different cost driver basis quantity, in other words 13,000, we would have a different cost driver rate. If the practical capacity is used, the cost driver rate will be 300,000 divided by 15,000 is equal to 20 per purchase order. That's the rate that we have used in our workings. Whereas if the budgeted activity level is used, the cost driver rate will be 300,000 divided by 13,000, and this is 23.08. Support activity costs are caused by the level of capacity made available rather than budget activity level. Therefore, the correct denominator is practical capacity. So we have the two options. We have the capacity and we have the budgeted quantity. Both these can be used. They will give a different cost and a different cost driver rate. As we have said, that the cost to the organization of supplying the resource arises by the total supply of the resource, not by the budgeted quantity. So therefore, it would be more appropriate to use the capacity and not the budgeted quantity. The budgeted quantity, if we use, will be a smaller amount usually, and will give a different, therefore a higher rate. Using budgeted activity would mean that the cost of unused capacity is hidden in the cost driver rate and charged to the product. So therefore, if we use the budgeted quantity, then we have a higher cost driver rate and more cost is charged to the product. And what is this additional part? This additional part is the cost of the unused capacity. So we would be hiding the cost of unused capacity in the cost driver rate and charging it to the product if we use the budgeted quantity. Budgeted capacity usage can lead to higher cost driver rates and will result in an increase in reported product costs. This is what we have said. There is a danger that bid prices will be increased when demand is depressed, at a time when a firm should be considering lowering prices. So there could be times when we are raising the cost and therefore raising our price of bidding. And that might happen at a time when you need to lower the cost, and therefore you will be misquoting and having an inappropriate bid, and that might not be successful. Practical capacity ought to be used for measuring human resources. For physical resources, it is recommended that a modified practical capacity, i.e. normal capacity 3-year outlook, should be used. So therefore we are saying that there is a modification that can be done, and we can use a 3-year outlook on practical capacity and use that as a basis for cost driver calculation and not the budgeted quantities. That's all for today. Thank you very much.